Nvidia dropped 10% this week. Today, I'm going to tell you what I think it's worth. We're also going to take a look at some of the companies reporting earnings this week, and I'm going to give you my opinion on what I think it could mean for the broader market. I think if this thing goes straight up from here, I'm just going to start calling GPUs greed processing units. Welcome to the Stock Sales Flyer. My name is Aaron. As always, nothing in this video is financial advice. These are my opinions, and this is for informational purposes only. Let's go ahead and jump in. So, 10% drop for Nvidia on Friday. Before we look at any company, what we always want to do, right, is we want to understand how they make money. I mean, they're known for their GPUs, right? But part of the reason why I wanted to highlight this is that they go into more detail in the 10K than just saying, you know, we make GPUs. In fact, they design the GPUs and then have foundries produce them for them, which is a part of why they're able to maintain a higher margin business, as I understand it. So they explain here they are a full stack computing infrastructure company with data center scale offerings that are reshaping the industry. That is obviously true. We see a lot of other companies going to Nvidia for the things that they offer. And I thought it was worth noting that they report their business results in two segments. So they have this compute and networking segment. And then they have the graphics segment, and we've seen them have sort of their story change in the recent years, right? So the last year or so, year plus maybe at this point, the story has really been AI. That's been a big part of this. Before that, you know, we had a period of time where the story with Nvidia was cryptocurrencies and cryptocurrency mining. So Nvidia and their business, they've had some different catalysts that have continued to make them a valuable company. But I think it wasn't a surprise to value investors to see, or at least to a lot of value investors, to see this 10% drop on Friday, going all the way to $762 on the nose. Remember, this thing was trading much higher not that long ago. I mean, 950.02, March 25th, here on Google Finance. So what is it worth? Again, I don't think that it was a surprise to value investors to see this thing take this dip the way that it did. And so it really begs the question, if we're going to go in and evaluate this company, we should look at the story, look at the numbers, and see if the numbers and story, when put together, paint a picture that say this thing is on sale and it's now undervalued, or is it still overvalued? So I've got my valuation here. We can walk through my thinking. So we've got the total revenue for the past several years here. Their fiscal years, they've already had fiscal year 2024 end for them. So you can see this number, $60,922,000,000 in revenue. And so if we look at some of the analyst estimates I found, 2025 fiscal year, the projection is for that to increase substantially. And then into 2026, we're looking at another 22.06% increase. So going forward from there, the question for me was, what's revenue growth going to do beyond 2026? And this is a hard company to value because there's a lot of question marks around, you know, what's the future going to hold? And I'll talk about some of those questions that people might have regarding their future as we go through today. But to really try to get an estimate for their revenue growth rate, I thought it wouldn't be a bad idea to go back and look at a couple of other companies that were similarly successful in the technology space. In one of the last times we saw a major boom like this. So the dot-com era, and looking at the dot-com era and looking at Intel and Microsoft and then comparing it to Nvidia in this sort of AI boom and seeing what were the revenue growth rates for those companies back during the dot-com era. And so if we look at Intel, which obviously their chips during the dot-com era, kind of a similar idea, right? So they were driving a lot of the dot-com era. If you go back to 1992, they had 22.29% revenue growth. And then you can see the numbers as you go through 93, 94, 95. So they had a solid 6 years of really great revenue growth here. And then we started to see some decline, 98, 99, 2000. I'm not sure exactly why that is. Maybe it's more competition. Maybe it has to do with the business being cyclical. If you have some input onto that, maybe you could chime in the comments. But I think that's an interesting part of the story, because are we going to see something similar for Nvidia? Are we going to see a cyclical type of thing happen? Will we see more competition? I think we're already seeing that, actually, and I'm going to, and while these other businesses that are going to be competing with Nvidia have not yet, gotten into the market in the same way, I think we're seeing some signs of how that could go. So I'm going to be sharing some of that information with you. Also looking at Microsoft. So we go back to the 90s for them as well, and we see again, 93, 94, 95, 96, 97, up through 99. We're talking over 20% revenue growth, in some cases over 30%, over 40%, and then we see a little bit of a tail off as you get into the 2000s. Still great revenue growth, but not at the same levels that you saw in the 90s. And so when I took this into my valuation for Nvidia, I looked at that revenue growth rate for 2026, and then I said, well, analysts are looking at 22.0, at least these analysts that I looked at, they're looking at 22.06% revenue growth between 2025 and 2026 fiscal years. So I don't think we're going to see a huge spike above that. Just me personally. And so when considering the numbers that I just showed you from Intel and Microsoft in the dot-com era, I said maybe in 2027 fiscal year, they see 20%, and then 20% in 2028, 2029, and then maybe it tails off and they get 15% revenue growth going forward. And I did do a 10-year valuation on this because it is more of a growth company still, even though they have grown so much. But I thought it made sense to go out a little further than doing like a 5-year valuation. In terms of net income margins, their net income margin in the last fiscal year is fantastic, 48.85%. I based the net income numbers that I did for 2025 and 2026 on GAAP earnings estimates from Ticker, and I combined that with I believe this was the non-diluted shares outstanding. And the reason why I used that number was because the GAAP earnings should already account for share dilution. So I don't think, I didn't want to use a diluted share average there. And obviously the shares outstanding will change. I did not account for any buybacks or anything like that. So that said, I think these net income margins would line up pretty well with what we could expect over the next couple of years based on the sentiment and how things seem to be going. So we get 50.79% margin for the 2025 fiscal year, and then we get a 49.93% net income margin for 2026. Now, beyond that, I think it makes sense to say this could taper off some because I think, again, that Nvidia is going to begin to see some more competition in the market, and maybe this is a good time in this discussion to talk about that. We just saw, this is articles from April 10th, 2024, and Meta debuts new generation of AI chip. And if you go down through the article, it actually explains that Meta planned to deploy a new version of a custom data center chip to address the swelling amount of computing power necessary to run AI products in Facebook, Instagram, and WhatsApp. And it says the chip referred to internally as Artemis will help Meta reduce its reliance on Nvidia's AI chips and reduce its energy costs overall. And so this gets to part of my argument here. I don't think that Nvidia is going to, go away. I mean, I'm sure they're going to do fine, but they're going to face increasing competition from companies like AMD and apparently Meta getting into designing their own chips. So I think seeing their net income margin taper off to about 35%, which is pretty similar to like what Microsoft does. I think that would be a normal expectation if that's what we saw going forward after the next few years, especially if there is some, cyclical nature to the chips business. In terms of free cash flow to net income, I used analyst estimates for free cash flow for the next couple years. And then I carried forward an average after that fact. And actually, let's adjust this slightly because I'm going to bring this average forward. That's going to change the valuation slightly, but not a ton. So, and then I'm going to carry this average forward into the future years. So beyond 2026, 94.36% for the free cash flow to net income. If we look the perpetual growth rate, I set at 4%, which is actually higher than I usually use. But I think that the nature of the business, computer chips technology, they deserve a little bit of a higher perpetual growth rate. This number here obviously is going to change a little bit because I just adjusted things. But if we look at the weighted average cost of capital, it does result in a higher required rate of return than a lot of companies would probably have. And so that might be a criticism of this valuation. Maybe you think that, maybe you think that we should use 10%. Some people, they would use what's considered a risk-free rate, which right now would maybe be 5%, or the US 10-year bond rate right now, 4.615% is the risk-free rate that I used. Maybe you would argue that they deserve a lower beta now because they're more of a developed company, and so maybe the average beta doesn't work as well as it maybe once did. From the 5-year average. So these are things that, this shows that when you're telling the story in these valuations, there is an art and a science that have to come together. But when I looked at the numbers here, I was pretty comfortable with the results that I got. And I'll continue to explain why. It has to do with comparing the number I got here, the fair value of the equity, which is $355.16. It has to do with comparing that to the PE ratios that you would get if you go with these net income numbers out into the future. So by 2029, if you were to pay 15 times based on the shares outstanding here from B18, which has diluted weighted average shares from the 10K, and I didn't factor in for buybacks or anything like that. So that's a factor as well you'd have to consider. But not accounting for that at all, you'd be looking at a P of 15, $495.33. And for this, I did all the way up to a P of 30, which would be $990.67. So if you consider this in 2029, and you're talking about, at a P of 30, $990.67, and you compare that to the current share price, there's not a ton of upside there, right? And that's really a part of the concern for me with looking at investing in this business is I don't think that I think a lot of the growth story is factored in here. And if they don't hit that growth story, if they face that increased competition, then where could it go? I mean, I just don't see the upside with the share prices at the current levels still. Again, that's just my opinion. I know some will disagree with me. I would welcome comments. If anyone wants to chime in and talk about it, more than welcome to. I'd love to have those conversations. But for me, I just don't see the upside there with share prices still at these levels. With a 20% margin of safety, I'd be looking at $284.13 is maybe what I would be looking at here. And you can see this number is going to be slightly different based on that free cash flow change that I made there in the future years based on the average that I use to calculate those going forward. But you're talking about probably 29 to 30 times earnings right now would be that price. Here I can actually take a look at that right now. So if we had $355.16 as the share price, the EPS on this was, I think, $11.96 last year. See if we can find that. And that would be a GAAP number. Let's bring up Nvidia. Yahoo Finance uses the GAAP earnings numbers, I believe. So yeah, $11.96. So if we take a look, what would that be? $355.16 divided by $11.96. That would be like paying about 29.7 times earnings, rounded up. So yeah, about 29.7 times earnings right now is what you'd be paying if you got that for $355.16. If we go out to 2034, you can see, P of 30 then, you're looking at $1,992.58. So you're talking about a 10-year investment, and you would, at current prices, you would do less than 3 times. I mean, that's not bad. But that's if these assumptions hold true. And again, there aren't things that derail that growth story for Nvidia more than what I have in the valuation already. So this is just information. This is not a perfect science. There's a lot that goes into these things, but I hope that this is at least helpful. I've seen some people compare Nvidia to Cisco during the .com era, and how this did not still hasn't recovered since its peak after the .com bubble. I don't know if that's Nvidia. I mean, I would like to think that will not be the case. But that is a perspective I've seen some have. I don't know, but I do think that at current levels, it's still at this time overvalued, and I do think that it has some room to come down farther. If we look at, actually, I went to the chart here. We take a look, and if we draw if we draw a line 355.16, let's zoom in here and take a look. If we draw a line 355.16, if I can get it to that point, being a little precise here, but that's okay. Okay, we're a penny off there. So if we go to 355.16, I'll leave it at 355.17. That's close enough. But the thing that is interesting about this, right, is that this estimate that I got, it goes right through this gap up from back in May. And you're also looking at, a number pretty close to the local top back in 2021. So I found this really interesting when I did this, that the valuation changed a few dollars here or there, but it's that price I get with a few dollars change here or there, even it's right around this level. We saw that gap up and then that local top in 2021. So does it come back to those levels? I definitely think it's possible. I mean, I'm not going to say it can't happen. I wouldn't be surprised if it didn't happen. But for me, too much uncertainty. I'm not going to be investing in Nvidia at these levels. And that's my opinion on the stock at this time. Is not on sale. So with that, let's take a look at the earnings this week. So there's a lot of companies reporting. I think that there's some great things this week that could give us some insights into where the economy is going. So we've got Verizon reporting tomorrow morning. And then on Tuesday, you've got Tesla, Visa reporting. Also, UPS is one that I'm going to be keeping an eye on. The reason I'm interested in how UPS does is because shipping numbers can often be leading indicators for how the economy is doing as a whole. If people are not buying as many things that need to be shipped in, then they're less likely, the economic outcome, if people are buying fewer things that need to be shipped via carriers like UPS and FedEx, is maybe not as strong. I mean, you can't take it to the bank, but it could be an indicator. So I'm going to be keeping an eye on that. Meta on Wednesday, and then we've got Chipotle on Wednesday. We've got Microsoft and Google Alphabet on Thursday, Roku on Thursday as well. So I'm going to be keeping an eye on a lot of these earnings. And one of the things that I'll be paying attention to are these ad revenue based companies. So how does the ad market look? How does it look for Google? How does it look for Roku? How does it look for Meta? These companies that their revenue is based on ad income to a large degree. So I'll be keeping an eye on that. I'm also interested in how consumer discretionary companies are doing. So how is Chipotle doing? Are people still going to Chipotle and spending their money eating out like that? Or are they seeing some slowdowns? So I think that these are things that could give us some indicators in terms of what the broader economy is doing, and I'll be paying close attention to that. So I think that's where we'll leave it off today, guys. If you found this helpful or interesting, please, drop a comment. Let's have some conversations about what's going on in the markets. And please like, subscribe, click the bell to get future updates on future videos. Thank you so much for being here tonight, and or whenever you're watching this video, and have a great rest of your day. Bye.